Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Thursday, 23rd October. Coming up on the show, Tesla's profits fall after rising costs undermined record sales. Quantum computing stocks are soaring, I'll tell you why. And a spike in tensions with Russia and China is weighing on investors' minds. So grab your coffee and let's own the morning. The first thing you need to know is that the US is imposing sanctions on Russia's two biggest oil companies, Rosneft and Lukoil. That has sent oil prices surging. This is the first time the Trump administration has imposed direct sanctions on Moscow over its invasion of Ukraine. The move has also sent shockwaves into China's oil industry. Around 20% of its crude imports come from Russia. The risk for China, as well as India, Russia's biggest customers, lies in their dealings with sanctioned entities, which can leave companies exposed to secondary penalties, such as being cut off from Western banking systems. The next thing you need to know is that the US government's gross national debt surpassed $38 trillion. This record number comes in the middle of the government shutdown. In August, it stood at $37 trillion. So this also means that this is the fastest accumulation of $1 trillion of debt outside of the COVID-19 pandemic. And the last thing you need to know about is Tesla. Its profits dropped more than a quarter, and that's despite record car sales. That sent its shares down in the pre-market, down over 3%, as you can see there. Now, revenue of over $28 billion beat the street estimates, but operating margin of 5.8% was almost half of what it was last year. Now, towards the end of the earnings call, the firm's CEO, Elon Musk, pleaded with investors to ratify his upcoming $1 trillion pay deal. Well, to get more on Tesla, I'm joined by Sam Abu-Al-Samid. He's VP of Market Research at Telemetry. Sam, thanks so much for joining us here on Market Sunrise. Well, let's start with your reaction to the results. I mean, it looked kind of a mixed picture, but ultimately profits did fall.
Yeah, I mean, it wasn't a surprise to see revenues go up a little bit and profits fall. Tesla did have record deliveries in Q3, but that was almost entirely due to a pull ahead in sales in the U.S. as consumers tried to take, and we saw this with other automakers as well, as they tried to take advantage of the expiry of the federal tax credits at the end of the quarter. So a lot of people went out and bought EVs that might have waited until Q4 or even early 2026 in order to get that $7,500. Everywhere else in the world, Tesla's sales were down, including in China, and they've had to participate in the price wars in China, in Europe, and some markets in Europe. Their sales were off almost 50%. So it was not really a surprise to see their profits go down despite an uptick in their revenues.
And there's a good chance that sales in the US will continue to fall because of the end of the tax credits, which ended on the 30th of September. But, Elon Musk and Tesla might argue, well, hang on, we've brought out two cheaper versions of the Model Y and the Model 3. Surely that should help soften the blow.
They're not that much cheaper, and frankly, the decontenting they did on the Model 3 and Y standard editions really makes them far less appealing than the versions that they had been selling previously. They took away a number of features. For example, on the Model Y, it still has the glass roof that they have on all the other Model Ys. They just put a cover over it so that buyers would not be able to see through it, which is just not very appealing. I don't think that those models are going to be particularly appealing to consumers, and I expect that Tesla sales will go back into their downward trend that they've had for the last several quarters prior to Q3. Well,
another area that Tesla is moving into to kind of soften the blow of falling car sales is robo-taxis. How do you see that progressing? The tests have only just started in the summer in Texas. Is this something that could generate a lot of revenue for Tesla?
It's unlikely. First of all, the prices they're charging for the robo-taxis are unnaturally low. They're just trying to entice some people to try it out and get some attention for it. But the reality is their technology is simply not ready to work for an unsupervised robotaxi. A camera-only system like this is probably never going to be sufficient to be able to drive around. And what we saw was, within the first weeks and days of the operation in Austin, there were a number of incidents with these cars. They are simply not safe enough to operate in an unsupervised mode the way, for example, Waymo's cars drive around in places like San Francisco, Los Angeles, Phoenix, Atlanta, Austin. So I do not expect Tesla to have a viable robotaxi service anytime in the foreseeable future.
Now, investors clearly haven't liked what they've heard from Tesla overnight, and shares are down in the pre-market. But is there any glimmer of hope for Tesla? What areas do you think Tesla can break through in?
They have had some success this year with their solar and their energy storage systems. There was growth in those particular segments. It's still a very small part of their business relative to the automotive business. The automotive is still 85% of their revenues. That is their real business, and that's where they need to put a lot more emphasis on making sure that they have competitive products. And that's where their business is going to be for the foreseeable future. But the solar and energy storage are definitely two other segments where they have some potential for more growth and profits, especially with all of the focus on data centers. Those data centers require enormous amounts of power, and the grid and energy production, electrical production for those is simply not up to the task yet. So they do need a lot of storage batteries. So that's something that they could definitely get some growth from.
And Sam, on Elon Musk himself, what did you make of his move to sort of plead his case for his pay package?
Tesla's valuation has always been unnaturally high for the past decade, based entirely on the fantasy stories that Musk tells about where the business is going. It's always really been primarily an automaker and should not really be valued significantly higher than other automakers. So I think there's a bit of a desperation on his part. Telling stories about robots and AI that are probably not going to be significant businesses, certainly not going to be profitable anytime in the foreseeable future. But he desperately wants to get more control of the company.
Sam Abu-Al-Samid from Telemetry. Many thanks for your thoughts on Market Sunrise.
My pleasure. Have a great day.
Okay, well, before we head into the break, let's check in on the markets. Okay, we start with gold, and prices are back on the rise, regaining some of the ground after two sessions of pretty sharp declines. Those renewed tensions between the US and China seem to be lifting demand for the safe haven asset in early trade today. On Tuesday, bullion fell 5%, remember, and yesterday it almost fell below $4,000. It looks like many investors were trying to take some profits after the precious metals' pretty impressive bull run. Okay, let's move on to Bitcoin now. And prices of Bitcoin are on the rise again as well, over 2% as you can see. Traders are positioning themselves before tomorrow's key inflation report. So that's partly down to why Bitcoin is higher today. And with most official economic releases on hold amid the ongoing US government shutdown, Friday's consumer price index print is expected to be the only major data point guiding markets this entire week. Okay, let's turn to Asian markets now. And markets fell pretty much as lackluster earnings from tech megacaps deepened a sell-off on Wall Street, while US sanctions against Russia and possible new export controls on China revived geopolitical worries. Now, look at South Korea. It's down almost 1% today. It's fallen from its record high, and the central bank there actually kept rates on hold as pretty much predicted by most analysts. Okay, let's move on to Europe quickly now. And European stocks are hovering near record highs. Energy stocks leading the way, unsurprisingly, as well. And just a very quick look at how Wall Street might open, and markets kind of struggling for direction a little bit here. Down a little bit, but really struggling here to get some firm footing here. Now remember, there's more earnings to come, and of course that CPI print that I mentioned coming up tomorrow as well, which investors will certainly be looking forward to. Okay, we're heading for a short break, but stick with us. We'll be taking a closer look at semiconductors. Well, welcome back to Market Sunrise. Well, let's talk about chips. There's a lot of movement in the sector, and I'm not just talking about Intel reporting earnings tonight. ST Microelectronics, the European giant, despite beating analyst estimates for the quarter, the stock dipped, indicating investor concern over the negative year-over-year trends in profitability and the conservative guidance for the fourth quarter. And another company that's catching the headlines this morning is Next Silicon, an Israeli startup which just revealed its new accelerator architecture. It's called Maverick 2, and it aims to take on Intel and AMD. So why are all chip makers at the center of attention from investors, the corporate world and governments alike? Well, our tech editor, Dan Howley, explains why semiconductors are so important in our world and tells you about some key players you need to watch.
From your smartphone and your PC to the refrigerator in your kitchen and the car in your driveway, semiconductors are virtually everywhere. But despite the near ubiquity of such chips, they're still relatively misunderstood. Semiconductors are complex products with billions of microscopic switches. But to boil it down to less complex terms, it's the stuff computers are made of. So when we're talking about semiconductors, it can refer to a wide range of things across the entire chip ecosystem. Some of the biggest names in the sector, like NVIDIA and AMD, design their own chips, meaning they come up with the blueprints for how the chips will work, what tasks they'll perform, and how all the billions of tiny switches inside should be arranged. But those companies outsource fabrication to companies like Taiwan Semiconductor that specialize in building processors. That's a type of chip that does the actual thinking or computing inside of a device. Then there are companies like ASML. It develops the machinery necessary for photolithography. That's where manufacturers print tiny patterns onto chips to make them work. So let's walk through how chips are made. Each chip starts out as a wafer. That's a thin slice of silicon that serves as the base layer for making chips. Silicon is a natural element found in sand. Manufacturers then polish the wafers and, using photolithography, draw a series of circuit patterns onto its surface. Next, several layers of material are built up and etched, creating the building blocks of the chip. Chip makers then cut each individual semiconductor out of the larger wafer and package them, allowing them to be placed into everything from the phone or laptop you're watching this on to your video game console, watch, or even your treadmill. All of this can take months to complete. And they're not just built in one place. Wafers can come from Germany, Taiwan, or Japan, while chips can be fabricated in places ranging from Arizona, Ireland, or India. It's important to note that the US imports a relatively small number of individual chips. Most semiconductors, even those built in the US, are sent to other countries that manufacture electronics and other devices, which are then imported back to the US. Different semiconductor companies play different roles in the chip-making process, from NVIDIA and AMD to Taiwan Semiconductor and ASML. Each has its own corner of the sector. It all makes for a massive ecosystem of global partners, and it's only getting bigger as companies continue to build AI data centers made up of tens of thousands of semiconductors.
Well, keep watching the semiconductor space very closely here on Yahoo Finance. Now, let's take just a short break before we move on to trending tickers. It's time now for today's trending tickers. Let's look at stocks trending in early trade. And we start with a quantum computing powered rally. Shares of Rigetti, D-Wave Computing and IonQ are all soaring in pre-markets, some up more than 20 to 30% at one stage after a surge of investor interest in quantum tech. The rally is fueled by a Wall Street Journal report indicating that the US government is in talks to take equity stakes in quantum firms. And this is happening as we are seeing concrete signs of progress in the quantum space. Google just published new results from its so-called Willow experiment, saying its next-gen chips are 13,000 times faster than the most powerful supercomputers and can solve calculations that now take thousands of years to run. That's likely to revive the debate around how quickly quantum technology will be scalable. Okay, moving on to aerospace, and Elon Musk's SpaceX may be getting a new rival. Europe's satellite companies led by Airbus are joining forces to challenge the Starlink dominance. Airbus, Thales and Leonardo are all trading in the green today in Paris and Milan. They have just announced a landmark agreement to merge their satellite businesses. The move, codenamed Project Bromo, aims to create a European space giant with an annual turnover of about $7.5 billion. The new company, which is expected to be operational by 2027, will consolidate European space technology and manufacturing to help the continent develop its own connectivity networks in space and become more competitive. And let's stay in Europe with two more European names to watch today. First, Kering, the owner of Gucci and Balenciaga, is flying in Paris trading today after an already very strong month. Investors seem confident that after a few tough years, the new CEO of Kering, Luca de Meo, has the right strategy to turn things around for Gucci and other brands. And another European name that's been fading out of the spotlight, Nokia's network division, is gaining ground after positive results. I'll have more on that later, as it lands fresh contracts in 5G infrastructure and AI-driven network management. Shares up around 2% in Helsinki, up 12% in Helsinki. Finally, a quick heads up on earnings before we dive deeper into some big names this week. It's packed with big names after Tesla, IBM, ST Microelectronics, Intel and Ford will follow this evening. Meanwhile, meme stocks are on a tear this week, with Beyond Meat up more than 1,300%. Well, beyond Beyond Meat, Krispy Kreme, GoPro and others have seen massive swings fueled by online talk and Reddit bulls. Some are calling these memes a momentum trade. If you really want in, here are a few things you should think about from Matt Stuckey at Northwestern Mutual Wealth Management.
One factor that I think probably is a useful tool in a lot of investors' portfolios is the importance of price momentum or fundamental momentum as an input to their investment process. A lot of these companies do have price momentum behind them over the last 12 months, over the last 6 months, been very, very strong. But I think for this to persist into the future, these companies also need to demonstrate fundamental momentum. Okay, growing revenues, growing earnings, consistently out-earning their cost of capital for this to not only just be a trade, but turn into a sustainable investment.
And so, Matt, let's broaden this out, because there are certainly other areas of the market that have been speculative besides the memes. There's a lot of talk that the largest companies in the stock market could be in a bubble. I'm talking about the Mag 7 and the concerns over AI. So sort of extrapolate what we were just talking about, but talk about these big stocks and whether you think that they've gotten out ahead of their skis.
Well, we're talking about a very different quality profile. Let's just first, underline that point. Companies that are in the Magnificent Seven, so companies like Google, Microsoft, Apple, as an example, far out-earn their cost of capital sustainably, and they do it consistently. Now, a lot of the fundamental momentum behind these names the last few years has been driven by the AI compute infrastructure build out. The sustainability of that, I think, is the question mark. So far this year, we've seen continued upward revisions as we look to 2026. If you look at the four largest hyperscalers estimates for 2026, CapEx have risen by over 40%. That's a significant number. Over another $100 billion worth of CapEx is expected for 2026, on top of the $300 billion that was penciled in at the beginning of the year. And so that is investment that's going to flow to the NVIDIAs of the world, the Broadcoms of the world. It's just the question of ultimately the return on investment of all of this investment. And so certainly these companies have the cash flows to continue to spend. It's just whether or not they're going to continue to spend from their point of view of seeing that return on that investment. And it's just simply too early to tell at this point.
Okay, for marketers, earnings, well, they're going to take center stage again. Let's start with American Airlines, and it reported a smaller than expected loss, and that was driven by a rebound in business and leisure travel in its domestic market in the US. It's reported an adjusted loss of 17 cents a share in the 3 months ending in September. American said that it's better than average deficit of 27 cents predicted by analysts. The company predicted a return to profitability in the fourth quarter with an adjusted earnings per share range of 45 to 75 cents. And as you can see, shares are on the march in the pre-market. Okay, let's move on to T-Mobile, and a bit of a confusing picture here because despite adding 1 million new subscribers, shares are down pretty sharply in the pre-market, down over 2%. In fact, service revenues of 18.2 billion grew 9% year over year as well. So all noise coming out of T-Mobile, pretty positive. We'll obviously have more analysis later on Yahoo Finance to explain why the shares are falling quite sharply in the pre-market. Okay, let's move on to Dow Chemicals, and it reported net sales of $9.97 billion. Not only was that below consensus, but was a fall of over 8%, yet shares are up in the pre-market. Now, adjusted operating loss per share came in at 19 cents. Now, it's clear that demand remains weak globally and that high interest rates are continuing to put pressure on construction and big-ticket consumer spenders. All right, let's talk toys now. And Hasbro has just delivered Q3 earnings as well, and results beat expectations. Adjusted earnings per share came in at $1.68. The street had been looking for $1.63. Hasbro also raised its full-year guidance. It's betting on holiday season sales and demand for its digital gaming segment. And that initially did help shares go higher in the pre-market, but they're now slipping back almost 3% down. Okay, I talked about Nokia earlier. Well, they reported a sharp rise in sales of its network infrastructure equipment on surging demand from artificial intelligence and data center customers in North America. Shares jumped nearly 11% in early European trade at one point. Right now in the pre-market in its New York listed shares are up almost 8%. The Finnish telecom equipment provider's strategic focus has been increasingly shifting to network infrastructure, where data centers and AI investments are creating new growth opportunities for the company. Okay, well, moving on now. And business manager platform Workday is launching a new suite of agentic AI models in a bid to better compete with OpenAI's growing toolbox of applications. Well, Workday CEO Carl Eskenbach sat down with Market Catalyst host Julie Hyman and Yahoo Finance executive editor Brian Sozzi to talk more about the platform's new AI tools and its deployment amid growing concerns around AI replacing workers.
Number one, we did do a restructuring earlier this year, but we also talked about that restructuring was to give us more operating leverage to invest back in AI. And we also are now starting to look at a global workforce, trying to move our workforce closer to our customers around the world. So that's really what we've done. In fact, we're hiring as many people back as what we did in a restructuring. So I think there's a narrative out there that we did it purely because of AI. No, we did it to leverage AI and invest more into the platform as much as anything. Today, I think a lot of people, quite frankly, who are doing restructurings lean into it and say they're doing it purely because of AI. I don't think that's always true. I think people have overhired over the last 5 years coming out of COVID. They're restructuring to drive operating leverage in the business. That being said, everybody, including us, across every single function in the enterprise at Workday, we are leveraging AI. We're getting operating leverage, and we're
Okay, and that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. I'm Ramzan Karmali. Go own the morning.